Hello and welcome to this week's Australian Stock Market Report. Now this week, we're going to take a look at gold stocks and why they're falling and whether this spells opportunity. Then we'll get into the Australian stock market so I can share with you my thoughts on where it's heading, along with answering your questions and looking at stocks for you. Hello, I'm Dale Gillham, the Chief Analyst here at Wealth Within, and we're Australia's most trusted stock market educators. Now, before we move on, thank you for showing your support for our channel and hitting that subscribe button. Remember, as you subscribe, you need to click the little bell on the right of it so you keep up to date with our latest videos. Also, remember to tune into our live Australian stock market show, which is on every single Tuesday at 7 to 8 p.m. Australian Eastern Time. Now, this is the show we get to ask us, Janine and Dale, the stock market education and trading experts, to look at your favourite stocks and answer all of your burning questions. Now, gold is often touted as a hedge against inflation and a defensive asset to be used in volatile or falling markets. But with the current inflationary environment and the bearish mood in the stock market, should investors be buying physical gold or gold stocks as a hedge? Well, for an asset to be used as a hedge, it must rise in price to offset what it's hedged against. And so to use gold as a hedge means it needs to rise in line or higher than inflation. Looking at gold prices right now, we know that gold was trading at just under $1,800 an ounce in June 2020, and by August 2020, it had risen to around $2,000 an ounce. However, more recently, it's been trading back below $1,800 an ounce. Over the same period, inflation has risen from 0.7% to 5.1%, whilst the Australian stock market has risen 12.85% since the 30th of June 2020 to today. Now, looking at these figures, you would have to agree that gold is neither a defensive asset nor a hedge against inflation. Now, since the 1st of January 2022, the All Ordinaries Index is down just under 12%, whilst gold is only marginally down, which doesn't support the argument for gold to be used as a hedge, although it has been a more defensive asset than holding direct shares. Now, if we look at the 10 largest gold stocks in 2022, we see falls of between 3.37% for Perseus Mining, up to 40.59% for Evolution Mining, with the average fall just over 22%, and all looking like they're going to fall further. On the surface, there appears to be no identifiable reason as to why gold stocks are falling so heavily and why gold isn't falling by much. But if you've been looking at gold as a safe haven or a hedge, you may want to rethink your strategy. Now it's time we get into the market, so let's get started with what were the best and worst performing sectors last week. Well, the best performing sectors, they included information technology, which was up strongly. It was up 6.86% last week, followed by consumer discretionary up 5.62%, and healthcare, that was up 5.31%. The worst performing sectors included materials, and that was down 0.83%, followed by industrials, and that was down by 0.08%. And utilities was up 0.37%. The best performers in the S&P ASX Top 100 stocks included Xero, and that was up 13.02%, followed by Block up 12.48%, and WiseTech Global, that was up 11.09% last week. The worst performing stocks included Aurora, and that was down 8.26%, followed by Lynas Rare Earths down 6.70%, and Aluka Resources down 5.47%. So what do I expect in the market moving forward? Well, let's get into the charts for our S&P 500 All Ordinaries Index update for this week. We'll also answer your questions and look at the stocks that you've chosen for me. What an interesting week we had in our market last week. Whilst technically we can say it was a bullish week because the market closed up just over 2% for last week, it really was a real indecisive week because both of the move of 2% really happened on 2 days. Monday, it was quite a nice strong move. It was over 1.5%. I'll show you that on the charts when we get to it. And Friday, that also moved up by, but Tuesday, Wednesday and Thursday, our market pretty much didn't go anywhere. So our market showed a lot of signs of indecision. It showed a lot of signs of caution last week. So the market's still undecided whether it is going up or down, and whether the low of the 20th of June that we had only a few weeks ago was the actual low that I was expecting, or we could be expecting, and whether the market is now bullish. So we're still in that period where we're not sure whether the market stopped falling and started to rise, or whether this move up at the moment is more just a sucker size rally and we can expect further falls. But let's go and have a look at the charts anyway and see what they tell us. On your screen is the weekly chart of the All Ordinaries Index. Now, I'm going to show you, go back, and this is the one I left it as exactly the same as what we showed last week. But I do want to have a little bit of a look at the monthly chart just to show you what that looks like, because the monthly chart, and I know a lot of people don't sort of look at monthly charts, but this is the most important chart that you can have. And I don't care whether you're a day trader or you're an investor, this is the most important chart you can ever look at, followed by the weekly chart, and pretty much daily charts are next to useless to you. But I do know a lot of people, whether investors or traders, spend a lot of their life on daily charts, which is why so many people make so many mistakes. But looking at this, you can see here how it's really not. Here's a momentum line coming through here. I've just drawn that off that low back from our GFC low, and just a momentum sort of line. It's dashed, it's not an actual trend line. But you can see the market's just really coming back to near that. And that's why I was saying our market won't go below 6,200 points. I'm pretty confident of that. And you know, as I said in the video a few weeks ago, I'm pretty like 100% certain it won't go through it. I'm pretty confident it won't. I'm still very confident it won't. But there's a lot of support around that 6,400 point line from not only just that momentum line, which the market could go through, but it does look strong. And if we look here, our move down from that all-time high, let me just get rid of that, delete that so I can get into here. If I drag that down to roughly where that low is in the 20th of June, you can see our market has fallen 17.28% since that high way back in very early January, the new all-time high back in early January. So technically the market's bearish at the moment. We are in a bearish market, and you can see here it's really the market moved since about August last year. It's been really spasmodic and trading down, but this shows us so far July is looking good. I mean, we've got a bit of a sign here late June where the market came up to rise back up to close where my pointer is, which was the close for June was 6746, and currently here we're looking at a close of 6877, if I can get that, and I'll just put that in. You can see here so far for July the market's up about 1.93%. So going back to the weekly chart and having a good look at that. Now, last week I did say to you there's a couple of things that could happen. Either the market's going to continue to move up for the next 3-4 weeks, then come down, make a higher low than the low that we've seen here which happened on the 20th of June. You can see there Friday the 24th. That was Friday the 24th, but the low was on Monday the 20th. And you can see the low is 6581.6 points. So it's quite possible that is the low. But to confirm that, we do need to see a bit more of a move up. This is not enough for me this last week. We do need to get above this high there at 6953, possibly over the next couple of weeks, then come down and make a higher low. If it can do that, then it's likely that the low has happened and we are now going to be more bullish for the rest of the year. But it's still the other scenario is we just get a move up and then a move straight down and it goes below that low that I mentioned on the 20th of June. So right now we're in a bit of conjecture what's going to happen. Pretty much sort of the opposite of what I was talking up here at the top, whereas here I was saying we could just go up and then come straight down again, or we could go down then back up again and then come down into a low. So this second one turned out to be more correct. But again, it's just how we look at the market, because it's all about probability. So where's the market going to go to now? And as I said, whilst the pendulum is slowly swinging to being more bullish, if I go and have a quick look at the daily chart, you can see this week, that was Monday, very bullish bar, about 1.5%. But you can see here in the end of the day, it did come off a little bit. Tuesday's bar closed high, but not by much. Had a high of 6844. That's pretty much the same as the day before, 6843, only 1 point higher. Then we've got Wednesday, traded down. Thursday, traded up quite nicely. And then Friday, traded up to this point, but then came right back on the Friday. So there's a lot of indecision here in this market at the moment, but I do want to see a bit more of I would love to have seen this sort of move, a bit more of a sustainable, a lot more green bars going through, but it didn't actually happen. So at the moment, look, the market is bullish, but really just be careful. I know a lot of people are trying to jump in the market. They're trying to buy these low cap stocks. They're jumping into tech stocks at the moment. And you can see Xero did very well last week. They're trying to jump into some of these tech stocks that have been hit really hard. And some of the other pre-darling stocks on the market, ones that made a lot of money over a few years and were very quick to rise up out of the COVID low, and people remember those stocks and that they shot off. And so if they've come down pretty hard, they're jumping into these thinking they'll repeat those moves of the past or of that out of that COVID low. And that's not necessarily the case. They may not actually do that. So right now, be very, very careful about what you're buying. Make sure you're buying good stocks. Make sure you're doing your research, making sure you understand that there is growth in that stock. Don't just speculate, because so many people at the moment I'm seeing, they're buying the low cap stocks, and because they've come down and they go, oh, they're cheap now. And obviously Xero did have a fairly reasonable fall. WiseTech is another one that had a very big fall. Appen is another one that's had a big fall. So just be careful about buying some of those stocks. But right now, the jury's still out of whether the low is in. I'm still saying to err on the caution side, to assume that the market is still going to fall away. And if you do assume that, then you're going to have some safety measures in place, like your stop losses, etc. But if you don't have those and you just think the market's going to be bullish, then you're likely to make some emotional decision, buy some stocks that you probably shouldn't. And then you're probably going to email me saying, Dale, what do you think of this stock? Now I bought it at X, now it's at Y. What do I do? Do I hang on? Do I exit? And then that's why we get a lot of those emails and comments on our YouTube channel from people who've gone and bought stocks that they probably shouldn't have been into. But that's it for my market take for this week. At the moment, just hang on. I think, hopefully it looks like the market will be bullish this week. But again, anything can happen at the moment because there's a lot of indecision. So hopefully it is bullish this week. Hopefully get a really nice strong rise up this week and maybe for the next couple of weeks before it falls away for a week or so to test that low. If we do get a down week this week, then the pendulum starts swinging back to being we haven't seen the low yet. But just be careful at the moment and make sure if you do purchase stuff, any stocks, that they are very, very good stocks. But let's get into your questions for me for this week. Before we get into our first email, I really wanted to share some thoughts around people putting the letters DYOR in comments, not just, on in our YouTube comments, but I've seen them on, all sorts of different things. Facebook comments, I've had people, on my Facebook page, that sort of stuff, and they're putting DOYR, and I know people put it into chat things all the time when they're talking about a stock or the market. And if you're not sure what DYOR means, it's basically people, whoever's typed the comment, saying do your own research, or they're saying this is not financial advice, which is rubbish. And so I'm not sure why you're putting it there, because anybody making comments that can be perceived as being financial advice, doesn't matter whether you put DYOR on it, it's just financial advice, and that's really what it is. So I'm not sure why people do that, and people constantly are giving advice in chat forums and on YouTube channels and things like that, and we get it on ours. Some people, when people are posting a question in our channel, they might be saying, Dale, what do you think of XYZ stock, or blah, 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 whatever the question is in the comment section. Then other people come back and they start giving them advice. And it doesn't matter whether they put DYOR on there, you're still giving advice. And ASIC does not like that. If you're not licensed, then ASIC doesn't like it. So putting DYOR next to it's not going to really protect you if ASIC decides to chase you. The lucky thing with this, because you are posting on chat forums, or you're posting, if you're only just doing an ad hoc, every now and again, and you're not somebody who's trying to move the market or manipulate the market, you're probably not going to be on ASIC's radar. But then I think I'd try to avoid being on ASIC's radar at all cost anyway. But if you are in chat forums and you're putting DYOR or this is not financial advice, and you're a prolific poster on those things, then you will be putting yourself up into ASIC's radar, because they are cracking down on a lot of people who are unlicensed giving financial advice. And just because you put DYOR, it doesn't mean you're not giving it, because it's what people are taking it as. And ASIC are very specific in what they're talking about here. Now, we are fully licensed. I'm a fully licensed. We have our wealth within our company is fully licensed under ASIC. I'm very much licensed to be able to talk to you about stocks in the market and etc. But you notice I'm really, really careful about what I say. I keep saying to people, make sure you set your own rules, make sure you make your own decisions. Don't necessarily just take what I say as verbatim. But again, that's my little brief comment on that one. As I said, a lot of people are doing some, I won't say silly things, but dangerous things. And I mean, anyway, when somebody's asking a question on our YouTube channel below in our comment section, what are they asking? Are they asking for somebody else to comment and answer their question? Or are they asking Janine and myself to answer the question? Think about it. They're probably asking Janine and I to answer the question, not somebody else. So you're probably better off not answering the question. But I do love the bit of banter in there, and I do love people putting comments in there and helping everybody else. And it's a nice supportive environment. I love that, and it's a very protective environment. As long-term watchers of this recordings know that I just delete people that are just negative. I just delete people that are argumentative. I delete people that are derogatory to anybody else or anything. I just delete them straight away, and I do ban people from this channel because I do want it to be a nice, supportive environment. I do want it to be a friendly environment. I do want people to be supported and not be able to not feel that if they do post that they're going to get attacked, because as soon as that starts to happen, I just start deleting people that are doing the attacking. So and so that allows people to have a voice on the comment section, which I love, and I do love your posting, so please post more. But let's get into the questions that you have for me. And the first question we have today, it's from Neil. It's actually not really a question from Neil. He says you cannot know if the stocks have stopped falling. This was a comment that he put on last week's video, because I probably said something like, wait till the stocks have stopped falling. Now, Neil's a longer term watcher of the show, and he says, we cannot know when the stocks have stopped falling. Well, yeah, you can, but we didn't say with 100% probability. So that's the different thing is how do I say this? There are rules around and ways of looking at the charts and looking at the price of the stock to know where the probability is swinging from being this is probably going to keep falling, or no, it's probably going to be rising again. It's not 100% certain. And I'll ask you a question, Neil, and everybody else that's watching, I'll ask you this question. If you drive your car through a green light, does that mean it's 100% certain that you're not going to be hit by somebody going through a red light on the other way? And the answer is no. Things happen on the road, that people make mistakes, and so that does happen. But let me say to you, that's just a probability, but you have high probability when you drive through a green light through an intersection that nobody's going to hit you and it's going to be safe. But you can also I can also ask you, well, if you drive through a red light, does that mean there's 100% time you're going to get hit by another car, or you're going to hit another car, or you're going to cause an accident? And again, the answer is no, it's not 100% certain, but the probability is very high that you will. So that's how we work with the market, is whilst we don't know with 100% certain that the lowest price of a stock that we see is actually the lowest price of the stock, we only confirm that weeks and sometimes months later, not days later, weeks and months later. But what we do is the more the stock trades up and the more signals it gives us, the more bullish it looks, the more we can confirm that the low is in, and the higher the probability gets. Now you can get up to, I've even had up to 98% probability of knowing when lows are coming in, and I'll say that with all how's I going to say? I'll humbly say that, because there's some stocks that are just so regular that when you put the time and effort in, you know that it's going to have a low with very 90+% probability. Not all stocks, and not all of the time, depending on the volatility of the market, but you can know round about when a stock is about to find a low and finding support and start to move up. The next question we have is from Woody, who says, he was commenting on last week's report. So he actually made a comment on last week's report. He says, re CXO and LTR, you're looking at lines on a chart and offering advice on potential. He says, ... really, anybody can do that. How about considering company fundamentals, cash position, earnings or potential earnings, current short positioning, etc., etc. Really interesting comment, and I think, if you think lines on the chart is easy, then you'd be doing it. And your comment suggests to me that you don't actually understand technical analysis, because technical analysis is not just lines on a chart. Now, I make it look simple. When you look at an expert doing anything, they make something look really, really simple, and I would suggest that the majority of people out there that are watching this video who are doing technical analysis who would disagree with you. Now, whilst it's not hard to learn technical analysis and you can keep it really, really simple, fundamentals is really simple to do. It's so simple to do, but it's not funny. But if you're using fundamentals, then really it says to me that you haven't understood what technical analysis is, or what actually understanding chart analysis actually is. So, but hey, that's great, because that leaves opportunity for all of us that actually do chart analysis. That's fine. Now, I do fundamental analysis. That's not an issue. But I don't do it on this show, and I don't purport to be a fundamental analyst. I'm a technical analyst, I'm a chartist, I'm a purist chartist. That's what I do. So if you want fundamental analysis and company financials and all of those things that you mention in your comments, go somewhere else. Don't come onto this channel, because this channel is not about that. You'll never see it on this channel. And there are plenty of people out there that will do that for you. So, and there are plenty of reports that you can actually get. But if you do want a high level technical view, and I need to keep it simple because most of the people on this channel watching these videos are more beginners. I think it was about 80% last time I did a survey. They're more beginners or beginner traders or active investors. So I can't do heavy technical analysis on these charts because it will just go over people's head and get too complex for people. But thanks for commenting. But if you have a comment on that, if you're watching this and you've got a comment on that, and about technical analysis and chart reading, put it down below and tell this person about what you think of technical analysis. Whether you agree or not, I don't care. Whatever that is, it's horses for courses. Do whatever you do. If you read tea leaves and it works for you, that's great. Or if you sit on the ground and go and a stock comes into your head and that's how you buy them and that works for you, that's okay too. I don't mind whatever you do as long as it works for you. Next question we got is from Chris, who says, "Hi Dale, long-term listener, watcher of the show." Thank you very much, Chris. What is your take on the index 000? It's actually an ETF. He also says, and why the recent sudden fall? Well, I'm going to bring up a chart of 000, and it's actually an ETF on oil. So it's a beta shares index on oil. And on the screen there, you can see the monthly chart on the left and the weekly chart on the right. So it is basically, I had a tiny little look about it this morning. I don't get into these sorts of ETFs and things like these sorts of stocks and everything. But first thing to me is when something falls very, very heavily, and I'll look at let's go onto the weekly chart, and you can see this big move down here. I'm assuming that's what you're talking about. If you look at that, and I put on that little tool from there down to the close, it was around about 15.5% fall there in that week. Obviously, it gapped up a little bit, traded up, and then it fell quite heavily through there. But first thing I do is I always just Google. So all I actually do is just Google the stock. So if I see a big fall or a big rise, I'll just Google news on BHP or news on Wesfarmers and go and look at the announcements and what's going on. It could be a profit report, it could be something else, and so whatever that is. And that's all I did with this ETF, is just Google it. And I looked at the beta shares thing as well. But basically, it paid a dividend on the 1st of July, and the dividend was $1.20. And generally, when stocks pay dividends, and this is an ETF, but when it pays dividends, and this ETF did pay a dividend, it dropped $1.20. So if we go back to the chart and have a bit of a look, if I look at that price here, this price here where it closed was $8.15. Take $1.20 off $8.15, so you're going to get about $6.95, and $6.95 is around about where my pointer is. So it's dropped the dividend yield. That's pretty much as simple as that. It does look bearish still at the moment. I mean, obviously oil, you'd think this is linked to oil, and I believe they use futures and a few other things to actually hedge. I didn't go too much into what this fund actually does, but I know it aims to track oil, or the oil index. I think it's the West Texas, I'm not sure if it's West Texas crude or West Texas light oil, but oil, West Texas oil, one of the two. But it aims to track that before fees and all the other bits and pieces that it happens, and that's what it's likely to do. But I would suggest read the documentation on this stock, or this ETF, sorry. Read all the information and understand that. But if anything moves that fast in a matter of a day, always just Google it and just go and look at some of the reports and the announcements to see what the actual cause was. It doesn't actually mean it's bad. I mean, anybody who owned that ETF would have got that $1.20 dividend, so they're really not much out of pocket when you look at it in an adjusted terms from that point of view anyway. But thanks for asking the question. Now we've got a question from David, who says, "Hi Dale, really enjoy your show and only just ordered your book." Fantastic, thank you very much. He said, "I started to look into investing this year but still have a lot to learn before purchasing. I like the look of Zero and would be keen to hear if you think it's time to buy. I noted a few weeks ago you mentioned it may drop a little more, and it is now looks like it's turning around. Could you suggest how I could know this is confirmed? Kind regards, David." Okay, so let's go and have a look at that for the second. So I'll bring up Zero at the moment. So on your screen you'll see a weekly, a monthly chart, monthly on the left, weekly on the right. And yeah, look, at the moment, if we're looking at it, you can see just red, and Zero has fallen heavily. And as I said earlier up in the report, a lot of people are getting into tech stocks, and you can see how it's fallen 53% from that high there, and that's not even the all-time high. The all-time high is back over there in December 2020, but it's fallen 53% down into that low into June. But let's have a look at the weekly chart. And right here at the moment, a few weeks ago, it was probably down in this sort of area, and whilst it's possible it has stopped falling, right now we've had this big bar up here. I mean, you can see here, if I just really zoom that up for you, you can see 1 week it's big move down and big move up. So it hasn't told us it's stopped falling. So from here, this low, it closed up 11.74% 1 week. The next week, it gapped up, but if we go from the close of the week before, it fell 6%, and then obviously last week from there to there, it was up 13.02%. So is it going to do the opposite this week and fall away? I don't know. At the moment, none of that is proof that it stopped falling, and until we see a test of this low down here of 72.53, we won't really know. And this could just be speculators jumping in that zero is cheap, because you can see here, even back here in November last year, was $156, and now it's around $90. So people are jumping in saying this is cheap. I do like the stock, and it is looking more interesting, but has it stopped falling? I'm not going to confirm that at the moment, because until I start to see, the analogy you hear me say all the time is you can't walk upstairs till you put your foot down. So I need to see where the sellers are before I decide whether this stock is, this stock could go up another 10 or 15 or 20%. And then come down again, and after it comes down again, then I'll know. But 2 or 3 weeks up is not really confirmation for me, because it could go up 3, 4, 5 and 6 weeks, then come down and still make a lower low. So at the moment I'm just erring on the cautious side, and people say to me, yeah, but you could have made 15% or 14% or 15, 20% over the last few weeks if you jumped in early, and that's just pure speculation in my book, and that's a lot more hit and miss. I mean, you only have to watch our live show every Tuesday night at 7 to 8 p.m. every single Tuesday, and you'll see people bring up stocks that they've bought in thinking that they've stopped falling, only for them to turn around and they're asking, what should I do now? Should I hang on? Should I buy more? Should I exit? Because they're in a loss situation. But good stock, keep it on your watch list. I do really like it. Just can't confirm just yet whether it stopped falling. But now I've got a question for you, and that is, what topics or subjects would you like to see covered by us in our video? So what topics or subjects would you like to see us cover in our videos? Now what you need to do is stick your answer below in the chat for our YouTube chat section there. Thanks everybody for sending in their questions. I really do appreciate it. And some of the comments on the chat forum, or the comments in our chat forum below, I do read those, and they're great to read, and some of them, as I said, are very encouraging and great to hear, and the ones that aren't, the ones that are really negative, as I mentioned earlier, we just get rid of those ones, because they're not serving a purpose of lifting everybody up and helping them be better decisions and be better traders. But unfortunately, as the case every week, we can't answer every single person on whoever posts on our YouTube channel. It's just not possible. But remember, always the best chance to get your question answered is to publicly subscribe to our channel. That means having this little red symbol next to your name. I'm not sure how you do it, but I'm sure YouTube can tell you how to do it. But once you've publicly subscribed to our channel, type your question below in the comments section. Happy to look at answering those. Now remember, here on this channel we do these Monday market reports each and every week. We also do our live stream that's on every single Tuesday night, 7 to 8 p.m. Australian Eastern Time. So remember, hit the subscribe button, click the bell on the right of it. Also give us a big thumbs up so you know what we're doing here on this channel. That's it for me. I'm Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck and good trading.